All right, everybody, let's buckle up. The second half of our day is going to be even more action-packed, all right? So are we ready to move on? The theme is Bridging the Digital Divide, Ensuring Equitable Access to Technology. All right, so let's introduce the moderator and the speakers. The moderator, Mayumi Wakebe, with over 10 years in the startup industry and 5 years in VC, preparing now for an Africa-focused fund to support growth in Japan and Africa. Mayumi Wakebe. And the speaker, Shunsuke Murasaki, Chief of Staff at EMURGO, has over 11 years of experience in blockchain and B2B sales across Asia. Shunsuke! And Glen Jordan, CEO of Empowa, focuses on using technology to transform Africa's affordable housing market. Glenn! And one more speaker today, John O'Connor, a FinTech expert, founded RealFi and Nairobi, supporting unbanked businesses. John! Thank you very much. So, Mayumi-san, ここからはマイクでお願いしても大丈夫ですか？はい。ではよろしくお願いいたします。
Yeah, thank you, Chris. Yeah, so at first I want to share about digital divide situation. Yeah, according to the World Economic Forum article published in this January, during the last few years, the world has reduced the digital divide quite a lot, but we still have 2.6 billion people around the world without internet access. Yeah, world population is nearly 8.2 billion as of today, so nearly 1/3 don't have internet access. So, and the geographic location of the 2.6 billion unconnected bodies by region, internet penetration is 89% in Europe, over 80% in the Americas, and 70% in Middle East, compared to 61% in Asia and 40% in Africa. As of 2022, with women, 7% less likely to own a mobile phone and 60% less likely to use mobile internet access than men. On the other hand, we have been witnessing the power of digital solutions. New technologies are enabling leapfrog innovations in the emerging markets. Mobile phone-based payments are spreading further in Africa. According to a survey, Africa now accounts for 70% of the world's mobile payment volume. M-Pesa, one of the largest mobile money services in Africa, has seen a steady increase, eventually reached 66 million customers in March 2024. And now blockchain technologies is creating new money flows and solutions in emerging markets. So let's deepen this topic, learning from these three great speakers. Yeah, so I want to start with this question. So to everyone, could you provide examples of solutions that address financial inclusion in emerging markets, particularly in Africa and Asia you're working in? And also please share your current work in this area and describe its impact. So, Shunsuke-san, go first.
Thank you, Mayumi-san. So speaking of my experience in blockchain industry and also particularly in Southeast Asia, I think maybe the audience expects a topic about Africa, but my experience is largely in Southeast Asia, specifically Indonesia. So the specific implementation that we did for sort of financial inclusion was we run our coffee traceability proof of concept with our coffee manufacturer. So the idea was the supply chain is quite complex and very, very long, especially coffee and commodity. So upstream actors typically not well pronounced in the supply chain. So we leveraged the characteristic of blockchain technology to see the transition of goods starting from coffee beans to processor, roaster, and at the end of the day, the entire traceability information is going to be displayed in the mobile application at the coffee cafe or consumers in foreign markets. So that's how we believe back then to increase the appreciation of the actual value of produced by upstream actors. And also we thought about on top of that leveraging cryptocurrency aspect. If farmer has a wallet, then maybe you can do tipping. If you appreciate the taste of the coffee, as a consumer, you have a direct communication and a method to transfer value to the actual value creator. So I think that's something we explored in Southeast Asia and Indonesia. And through the POC, one of the off-taker in Euro paid interest in using the application so that we facilitate to get the commercial deal of that coffee producer to do new customers through the application.
Thank you so much. Are you thinking this project, this is very meaningful even in Africa as well? I've witnessed so many farmers in northern Kenya produce tomatoes, but they producing, but they don't know how it's treated, how it's purchased in the market. So great opportunity in Africa as well. So do you have plan to introduce that project to Africa as well?
So if there's a company interested in taking that POC to commercial level, I think we're going to look into it. But I think I could do it because I was actually in Indonesia and speaking with all the stakeholders in person. I think implementation actually really take time because we need to educate people that start with what is blockchain, and also the farm region that was doing POC didn't really have right internet access. So we need to come up with a very creative solution, how transactions need to be validated to really have the chain of transaction. So I think as much as we want to do a lot of things, but you really need to understand the local environment and speaking with stakeholders. So typically it takes really a long time to do that.
Thank you so much. Thank you. So Glen, could you go ahead?
Thank you. So I know it doesn't look like it, but I was actually born in Zimbabwe. And if you want to understand a non-functioning environment, Zimbabwe is the prime use case that you could study. And when you see this kind of dysfunctional society and a government that many people, particularly in the developed world, don't understand how dysfunctional the government is and the systems are, it really is an understanding of how important it is that what Charles was referring to earlier today is that we build systems from the bottom up, hence the name Empowa. And that it's particularly relevant in the housing sector. In Africa, more than 85% of income is informal. Now that means it doesn't come through a salary, it comes about through what in Kenya they call the hustle economy. People who hustle for a living. It's starting to become more like that also in the West as we get into the gig economy. But it's a process whereby people still earn money. So the perception when you look at housing in most of the major cities across Africa is that it's poverty that creates this housing shortage. That's not true. Where I was living in Cape Town in South Africa, I lived 300 meters away from an informal settlement. And to my own horror, because I hadn't realized this, people in the informal settlement were paying between 7 and 11 times more per square meter for their housing, which was actually a tin shack, than I was paying in the formal sector. And the reason for that is the informality. So the systems that are adopted from the West, the financial systems, the legal systems, everything that has been adopted from the West, from the colonial systems, do not function in emerging markets. That means we have to create new systems. We have to develop new systems. And that's what we're doing, particularly in the affordable housing space. Because the income is there, but it's not visible. How do we make the payments for this housing? How do we make it visible? So then we can make the payments for the housing visible, then we can attract investment into the space. We enable people to live in decent living conditions, which we should all be able to do, because it's not a question of poverty, it's a function of systems. So the question is, how do we solve those systems?
Thank you, Glenn. Actually, I read an article about Mozambique housing program. This is an article from 2021. But yeah, it said, according to the statistics, only 600 households in Mozambique out of a population of 30 million people. Is that true? Or if you know anything more about it, could you share about it?
That is true. That's a statistic. 600 mortgages out of 30 million people. Now, so when I use that, when we share that stat, people wait for the next number, 600, they wait for the 1,000, or they think I've mispronounced it. It's 600 mortgages in 30 million people. Now, in no society are there only 600 people who can afford that. So why is that the case? Exactly that. It's a function of the systems. It doesn't mean it's a function of poverty. So it's how do we support that? How can we create systems that do that? How can we create opportunities around that? There's a backlog of 50 million homes across Africa. So it is a massive opportunity to address this, particularly if people are paying significantly more for their housing than they should be. So in other words, it's an opportunity, it's a business opportunity, it's not just a mechanism of social good, which obviously that it is too, massive social good, but it's a function of addressing that and being able to enable people to business in a business way, not in a charitable way.
Yeah, that's more sustainable. Thank you. Yeah, John, please.
Well, the first question, I suppose, is actually back to you, Glenn. So these 600 people with mortgages, how did they get them? I mean, I'm very interested in the profile of this 600 and how they were so deserving.
Government employees.
I think I knew the answer. Did I really need to ask? Okay, so let's start with, I think, what's positive about what we see in emerging markets with regards to technology. I think the first thing to note is that great technology does not need to be shoved down people's throats. Great technology, it's sown on fertile soil, and the adoption comes from the utility which it's driving. So the oft-quoted example is M-Pesa, which started in Kenya. It's a huge success story. In Kenya now, where I live, cash is not something you see. People don't use cash because there is a better solution, which is mobile money. After I go to a restaurant, you'll ask for the number of your server, and 10 seconds later, you've been able to send them value. That's pretty cool, that everyone has a unique number through which they can receive and send value. And to sort of give you an idea of how this has dramatically changed the economy, being a policeman in Kenya is a business endeavor. It enables you to hassle people, to create fictitious infractions, and to be able to generate income in the form of bribes. A percentage of these bribes will go up to your line manager, to your local head of police, and then it will trickle up and it will trickle up. So you would think for this illicit usage of your position that people would want to hide the trail of money. But M-Pesa is so convenient that after you're being stopped by the policeman, they'll go and they'll say, take my mobile number, and then you can transfer me, my income here. And that really is what great technology does, is that it takes over a market in a way that no one can imagine living without using this system. The question is, I suppose, what's next? Mobile money was the beginning of something, but frankly, anyone who's been going to these conferences, maybe as long as I have or longer, we've been talking about M-Pesa and mobile money for far too long. It's an enabling factor, but it's not the product in and of itself. What do we build with these tools, and where are we going? From my perspective, the SME story, the hustler economy that Glenn was talking about is the story. You have 75% of all jobs are created from small and medium-sized enterprises in emerging markets. It's not working for Deloitte. It's not working for Goldman Sachs. It's that small little local business. So how do we support these businesses, for me, becomes the key question over the complements for technology and for impact. Mobile money enables us to work with each other. If I want to buy something from the tomato farms up north in Kenya, do they want to go and ship that stuff down to me where I live in Nairobi and hope that I'm there and that I'm going to pay with cash? No, this is a huge friction. So mobile money helps that, but where are we going to go as the next step, I think, is the real question for solving digital divides and being able to make an impact. So for me, this question's all around providing finance. These businesses are normal businesses. What do you need in a business to grow? Well, you need to have your business model right, probably a business plan somewhere. But the local banks aren't going to be the ones lending to you. So who is going to be the person lending to you? And how do you prove in a digital world that you are credit worthy? These are some of the core questions which I've spent a number of years working on, as have many other people, and I think that this is probably where there's going to be fertile products and fertile soil.
Yeah.
Can I add something to that? Just, John, one of the things around that, the mobile money, one of the interesting things in Africa as well is that it's such a young economy. So talking about your mobile money and the ability to transact, they are early adopters of technology. So that ability, more than half the population is under 16. Okay, and if you want to get something done on a technology basis, you give it to a kid. So the adoption of technology is that much quicker in Africa, ironically, than it is in the rest of the world, because there's a lack of systems and a need and a desire for the technology and systems that work.
Thank you for adding that. John, I checked your LinkedIn post, and you said in this May, and 40 million has been deployed into SME working capital finance, and through your data-driven model. And could you share more about the background of how your company did this, working with local institutions or?
Our model at RealFi is relatively simple. We work with fintech lenders across the continent. So these are local, regulated, non-bank lenders. They get very good at underwriting particular kinds of businesses. So one of our partners in Kenya specializes in lending to market traders. So these are, mums, dads who go to the market. They've got a tiny little stall, and they're buying and selling grain, FMCG goods, and this kind of stuff. And it's big business. These markets are not toy markets. It's where the majority of the population is going to be able to grow up, buy their foodstuffs. So all of these businesses are looking for finance, and the banks will not provide it to them. The banks do much better lending to government at 18% than they do doing all of this really hard work, figuring out the dynamics of lending to a small market trader. So they basically, we shouldn't even consider them as part of the financial solution for these SMEs. These fintechs have stepped into the gap, but they face the same challenges as the businesses that they're trying to lend to. They don't take retail deposits because they're not banks, so they need to figure out a way to be able to finance their activities. And that's where we step in. We ingest huge quantities of data from these fintechs. From this one particular one in Kenya, 30 million different transaction lines. And we use that information along with tracking cash movements and management accounts to really build a very sophisticated data-driven picture of the risk of lending into these portfolios. You do that across many different fintechs. You clean, you standardize, and structure that data in the same fashion. And you can start to build credibility from an investor perspective that they can understand the risk of participating in this lending, not only at the moment that they give you the money, but also on an ongoing basis, which is often a challenge. So that's really what we do. We try to take a data-driven approach to being able to make Africa feel a little bit less, oh, I don't understand the risk, it's Africa, it feels very scary, towards a much more data-driven conversation. So that's what we've done. We essentially create tranches, risk profiles, and structured finance products on top of this. And that enables investors to generate, in our view, incredibly attractive risk-adjusted returns, whilst also driving large amounts of impact. And as we do more and more fintechs, eventually we'll get towards a sort of choose your own adventure, but choose your own impact, where an investor can come to us, say, my required rate of return is going to be 16% in US dollar terms, maybe senior secured or something like this, and I'm particularly interested in financial inclusion or particularly interested in climate. And we'll be able to generate a portfolio for them which actually meets their objectives. So currently, yeah, we've done $5 million of lending so far on this model. Maybe by the end of the year, that's going to be 25. But we see this as really important work. There are great fintechs, there are great businesses out there, but knowing the good from the bad, and more importantly, proving the good from the bad towards maybe an international audience is really where we operate as RealFi.
Thank you so much. Yeah, so let's move on to next question. What inspired you to pursue your current work in emerging market, in particular in Africa or Asia? And could you share your personal journey in this field? And in terms of Shunsuke-san and Glen, what aspect of blockchain technology excited you and decided to use it?
So the answer is, I sort of covered the answer in the first question, but I think I was very attracted to the idea of making hardworking people in the supply chain visible in the coffee traceability project. And on top of that, I think that the benefit of blockchain technology, if you kind of break it down, the first one is the ledger, the immutable. If you put the data in, you cannot change it. So that really go well with the idea of traceability, and also the ability to send transaction. So I think there's a lot of hardworking people contributing to the sort of like cup of coffee that we are consuming on a daily basis, like coming from all the coffee production countries, but we don't get to see farmers and the actual value creation in detail. So I think that was the very idea that I was very attracted, and that's why we embark on the POC with the coffee manufacturer. So I think that's very attractive thinking. And also, if you had a chance to escalate, I think once you have, let's say you get tipping as a farmer, then you have cryptocurrency. Maybe those farmers are not access to financial product, just like we do on a daily basis. But once you are sort of onboarded with cryptocurrency, you can use that cryptocurrency and access to all sorts of application in the blockchain space. Stuff like decentralized application, finance, borrowing and lending. As a farmer, you don't get to understand how do you deal with your asset for the future plan and so on. But you have more access. Once you have cryptocurrency, you don't need to KYC, like when it comes to decentralized application. So you have a lot more ways to think about your future finance. So I think really connecting the actual business and get them on board to cryptocurrency world is, I think, something as a blockchain company, I think EMURGO can contribute, and I'm most attracted to.
Thank you. One more question about this. What differentiates Cardano blockchain or EMURGO from other blockchains?
So I think the Cardano's, the characteristic of Cardano is very, very secure, because I think IO, headed by Charles Hoskinson, really thought about, I think, what is the ledger, and really invented or inherited the benefit of Bitcoin, and then escalated that so that Cardano has a smart contract platform. So by nature, Cardano is very, very secure. And also, I think Cardano can add a lot of metadata in a transaction. So metadata is a history of transaction, just like you can put a memo on your bank transfer, but Cardano can add more metadata. So when it comes to financial transaction, you have more ability to describe and will put more data about a specific transaction. So I think that's really sets Cardano apart from other blockchain, like being secure and sort of like add more attribute to transaction, more capacity to add that compared to other blockchain.
Thank you so much. Glen?
Yeah, thanks. So as you heard, I'm Zimbabwean, so it was an easy step to make to try and make a fundamental difference, and also why blockchain was so important, because it is about systems change and building it from the bottom up. As John has highlighted, it's very difficult to understand how dysfunctional the banks are. It's really, really difficult for people in the West or in Asia to understand that, because the banks only lend to the government. That's it. They're not interested. And the DFIs consistently try and push funds through to allocate for any projects that they try, for any development projects that they try and do. They consistently, the only route to market of disbursement of funds is through the banks, and the banks have no idea how to deal with that, and they have no idea how to deal with informality. So for us, the blockchain was a key building block in taking what's invisible, the informal, and making it visible. That's the key part around what it does, so that investors can see the data and make that, and that's what makes it investable. So that's a key part around it. So otherwise, it's this black hole of informality. There's no credit histories, there's no credit records, there's nothing on which to base a decision, which is why the banks are so dysfunctional. So on that basis, the reason we chose Cardano was a number of reasons. One was John and team, because of the understanding of the innate nature in Africa of the lack of systems is actually a massive opportunity. Because where there is such dysfunctional systems or lack of systems, there is opportunity for systems to be developed. And that's particularly true in the affordable housing space, because it's a political hot potato across the world, but particularly in Africa, as we've just seen recently in terms of some of the riots happening in Kenya, some of the civil unrest. A lot of that is also due to housing and a tax that was implemented to try and raise money for affordable housing, but once again, it's how's that distributed. So that was a key part. So that was one of the factors. The other was the academic rigor. We really enjoyed the academic rigor that was applied to Cardano, because in our space, that's a key part around it, is the academic rigor to ensure that data is immutable, and to put that together. And the third aspect was the ecosystem. So the Project Catalyst and others enabled us to get going. And in fact, the first houses that we managed to secure funding for, because when we went to the traditional capital markets, there was nobody who was prepared to support the kind of initiative. So we went to the community. We went to the Cardano community, who funded the first 2 homes, then following up on that, the next 30 homes, which gave us the proof of concept to prove that what we were talking about was not pie in the sky, but was actually a genuine need, and met that genuine need.
Thank you so much, so informative. Yeah, so John, please go ahead.
I've slightly forgotten the question. Why emerging markets? Why am I working in that? Why Cardano? Is that the question?
No. Yeah, question is, what inspired you to pursue your current work in emerging market?
There we go. You see, no Cardano in that, Glen.
In Africa.
Okay, fine. Well, one of us isn't paying attention. I'm not sure which one. Look, I think that if we look across the next 20, 30 years, there are obviously a couple of very big open problems. The first is absolutely going to be the environment, and I think that, on a policy level, the world's now spending a lot of time on that. Whether that will translate through towards, impacts, I'm not sure. But I also think that, Africa is both a problem and a ginormous opportunity. We have this incredibly young population. We have a number of countries in the continent who have actually, I would say, done very well. The post-colonial period for Africa was not a pretty one. We've had so much regime change, so many challenges across so many different countries. In fact, last year was actually a very bad year for coups in Africa. We were ticking up again. But with all of this, there are huge opportunities. We have the opportunity for this incredibly young population to become economically productive, for the systems and institutions which are working well in certain countries in the continent, let's say the judiciary in Kenya. These institutions they're only going to be as good as the economies that support them. And I think what Glenn talked about earlier, people rioting. Well, what we know from the Arab Spring is having lots of young men who are unemployed is not good for the stability of your political system, regardless of whether or not you like that system. So really, I think the question across the African continent is, can we generate enough economic value that these huge numbers of young people are going to be channeling their efforts into a productive space that creates wellness and wealth within these countries? Or are we also, in 20 years, going to be talking about ginormous refugee crises from countries which have fallen away from that model and haven't generated the economic opportunity? So I'm being incredibly reductive here about an entire continent's worth of complex politics, but I think on a summarized level, I find it an incredibly inspiring both potential risk and opportunity to work on. Aside from that, I also have a family connection. My mother's Ethiopian, so I've always found this very interesting. And maybe as a final point, the weather in London and the UK was really getting to me. So, Kenya's got much better weather.
Yeah, thank you. So, so many opportunities and risks. This could be opportunity, but what challenges have you encountered while working in these countries, particularly when collaborating, if you need, with government institutions? And how did you overcome those challenges? Or instead, if you got just support from government, that's also fine. Could you share about these challenges with local government or regulations?
Challenges? Can we expand the session to 4 hours? I'm not sure. Why don't you guys start?
Yeah, so Greg, you can start.
I think, just again to highlight what I said earlier, being Zimbabwean, I have a fundamental mistrust of government. So the joy, and to John's point, one of the really exciting things about Africa is the people. The people are absolutely amazing. And just if you look at the music that's coming out of Africa, the art, the culture that's starting to emerge in a way that's becoming global, and I say that obviously with a particular music focus, but the opportunities, what that presents is a massive opportunity for building from the bottom up. And that's where particularly, again, the blockchain is really useful. So it really is for us, our focus is on how do we support the people and the small contractors and try and avoid government policies, government things, because as I said, and I use it from personal experience, is the governments tend to be handbrakes rather than assistance. And obviously, again, that's a massive generalization, and apologies to any government ministers in the audience, but that is generally the case. So it's around supporting the people and supporting the bottom up. As Charles alluded to earlier, Bitcoin emerged from people and decentralization is the key for me to the building of Africa. Decentralization, building it from the bottom up, enabling people to create their own livelihoods, their own mechanisms, their own ways of creating, storing, and remitting wealth, money and wealth, is the key to Africa. And so that's been our approach. Having said that, we are actually working with the Nairobi Stock Exchange as a mechanism to do that with support of government. Because again, once we start to prove it, and in Mozambique we had the same, once we had proof of success done from the bottom up, then the government wants in, okay? So that's the way we're doing it. Rather than go to the government and ask for permission, we prove it from the bottom up, and then the governments come to us. And so, for example, we've been allocated land in Mozambique to support the building of affordable housing because they've seen that these mechanisms can work on that basis, and therefore housing can be built, and then you get government support that way.
I think the first question when we talk about the role of government and all of this is what do you want from government? Obviously, this depends on your project and your product, but I think the best we can hope for from government is to not stand in the way, to provide at least either like an open regulatory environment or licenses for whatever your project is. And I think if that's the case, then I think, sure, it sort of makes sense. I think the expectation of having government do too much more is often where a lot of problems come and where a lot of projects fail. The simple reality is, and this is a generalization I can probably stand by, there's almost nowhere in the continent where government has the resources to be able to work on innovation. There are simply too many other pressing places that need time, resources, and attention that you coming with a very innovative idea, you're likely not going to be able to corral these limited resources away from high urgency areas into whatever exceptionally exciting thing you want to do. So, me personally, we spent a number of years working with the Ethiopian government rolling out a digital identity system. And, the product was great. The pilot we did was great. But we were also doing this essentially during the period of a civil war in the country. And you can imagine from a government attention perspective, what do you think is going to get priority here? So, there are so many challenges with working with government, and not all of them are even their fault, Well, actually, I'm going to retract that statement because otherwise I'm going to get into a very, very painful Twitter war about civil war in Ethiopia. But I think the point can still be made. If you're going to be trying to compete for that top 5 agenda item list, it's likely not going to go your way. Echoing what Glenn said, though, I do firmly believe that bottom-up approaches working within the private sector can be scaled and can provide win opportunities to then galvanize the attention from government where required. But I do believe that starting sort of from that bottom up is likely to achieve better results.
Shunsuke-san, any comment about?
Sure. I agree with Glenn. I think bottom-up approach, at least with my experience when we did a coffee, I think one of the things we could change if we had the time was we involve like a ministry in the beginning because it was about agriculture, but they tend to be like to go for like full-on plan, like it's not only like small POC, but let's leverage transactional data so that farmers can access to loan by leveraging those transactional data. But you need to prove something first and then build something on top of it. I think government tend to be like, build a grand scheme plan, but they really don't know what is the technology all about. So if you have like tangible experience, even a small thing, like here's this things work and we can build things on top of it, then you can have more meaningful conversation. But like I think you need to really understand like when like the right time to get like government or those people involved. Otherwise, like your projects will tend to be bloated and you kind of chase for the ultimate plan. So.
Actually, sorry, if I could just add one small thing onto this. There is also one other ginormous risk of working with government, and this is not about Africa, it's just a global thing, which is for you to associate your particular endeavor with a particular set of politicians is potentially dangerous because, the shelf life of a politician is not always that long. And I think particularly if we are talking about the emerging market context side, when there is change, that change is often quite dramatic. And policies of the old are likely to not be seen favorably by the new. And that probably is the same in the UK or the US. But, you often have to ask yourself, are you in the business of delivering your particular product? Or are you in the business of reading tea leaves about the political fortunes of one East African government? So from that perspective, I do think, trying to keep yourself out of the business of politics is sensible and smart practice.
Okay, thank you. We only have 5 minutes left. So maybe this is gonna be the last question. And so what's your vision for your company in 5 years to see the change you wanna see? And also, please give some message to audience. Some people may want to enter blockchain industry or may want to get involved with digital divide in emerging market. Or so your vision in 5 years and a message to audience. So Shunsuke-san, could you please start?
So at EMURGO, we are really focusing on financial use case, and it's getting more and more obvious for the industry and obviously for EMURGO. The finance use case is really prominent use case for blockchain. I think a couple years back, the surrounding infrastructure was not up for supporting all sorts of financial applications, but for the last 3 years, like a lot of technology and infrastructure has been built to support, especially tokenization in the narrative of real-world asset, like tokenizing real assets, like digitizing asset, and then bringing into tokenization space, and even use that tokenized asset and collateralize to borrow or do all sorts of financial transaction. So at EMURGO, we developed tokenization platform. So you can tokenize stable tokens of fiat into a stable token. You can do commodity, and we are exploring all sorts of the assets right now. So we are primarily focused on financial application in conjunction with wallet that we develop. Like I said, once you have token or assets and store into a wallet, you can do all sorts of transaction, connecting to DeFi. So I think that's really a vision, leveraging our wallet. That's been downloaded a million times already in Cardano ecosystem. So the message to the audience is we really want to see a lot of assets tokenized on the Cardano blockchain. So if you have assets or you have an interest in tokenizing your asset, we really would like to speak with you. Thank you.
Great, thank you. Glen?
So yeah, I think in Mozambique, Mozambique is very susceptible to cyclones. So Cyclone Idai in 2019 wiped out about 80% of the housing stock in a city called Beira. And 80% of the housing stock, which meant that 80% of the families lost not just their houses, but their entire livelihood and possessions. So our mission is to assist 1 million families get access to sustainable housing. That's our mission, that's our objective, that's what we're seeking to achieve. If I was to encourage somebody in terms of looking at this is the exciting part around the world and the state of the world today. There is such need, there is such opportunity in meeting that need in a way that works for everybody. Again, back to Charles's speech today, he made a number of points, it's around aligning interests. And if we can align interests where everybody benefits, then that's where you will meet success.
Do you have a message to the audience? Yeah. John, please.
Yeah. So where would I like RealFi to be in 5 years? So it's hard to describe how large the credit gap is. I don't think numbers really cover it, right? But the formal numbers you get back are something like $360 billion for Africa. I think the real numbers are much bigger, but this is really for your SME credit gap. I don't believe in 5 years that we can be covering all of that, but I do believe we can make a serious dent in it. I absolutely believe that we could get to over $1 billion of lending, and I think that there's a path to that. But forgetting about the sort of boring answer, which is yes, more assets under management, more lending. For me, I've been in crypto for a number of years now, and that sort of one key message of just democratizing access to finance was really what resonated to me. But it's not just the democratizing access for these SMEs to be able to borrow. I think it's also about enabling that lending opportunity on the investor side. I think what we've learned across the last 10 years of crypto, though, is just because you can securitize something or offer a product doesn't mean you should. And if I was to look at some of the largest blow-ups across the last 5, 6, 7 years of crypto, Celsius, FTX, the reason why they've blown up is because actually there was no transparency, right? Which is so ironic for an industry built on trustless value transfers. But to give you an example, Maple Finance, a real-world asset protocol enabling people to buy into these real-world lending opportunities, was letting all of these retail customers go and lend to Alameda Research a hedge fund who they had no idea what the exposure of their balance sheet was. And actually, it was all buying more FTX tokens. So as we look at RealFi and what we want to do differently, I really believe there's something about, in a very transparent, sensible, and moderated fashion, looking how can we bundle up these assets of emerging market debt and do it in a responsible way where the investor not only is being presented with the right information, but also checking whether it's appropriate for that investor. All of the boring stuff that traditional finance has that we dropped completely when we were developing stuff in crypto. I think it's time to bring back some part of that in order for us to actually build sustainable products that should be around in 5 or 10 or 15 years. So that's what I hope, that we can make inroads, make the life of an SME easier, but also start to bring these products in an appropriate, sensible, and measured fashion towards hopefully eventually a retail audience.
Thank you so much. Yeah, so we had great discussion. So hope you, audience enjoyed this discussion. So could you please give a round of applause to all the speakers? Thank you so much.
Thank you very, very much. まゆみさん、ありがとうございました。All right, would you please rise for some photo session? Thank you very much. Once again, please give a round of applause to ありがとうございました。まゆみさん、Glen, Shunsuke, John.